Welcome. How would you describe your accountancy firm at present? How many partners, managers, accountants do you have? Have you got any marketing personnel? Some firms do have marketing these days. Financial planning, IT, support staff, others, total. What are they all doing? Productivity figures, just who are your firm? What's your team interested in? It's a good idea to conduct a survey and get some feedback as to what they're interested in, what type of work. Some people only want to do taxation work. Some people only want to do insolvency. Some people only want to do audit. But there's a growing number of people who also want to do business advisory services. And that's the main theme that we're looking at today. The very important question, though, is who are your clients? Because after all, these are the people who are going to be getting invoices from you for various services rendered. Are they going to be happy to pay those invoices? Are these services that you're going to be providing to them going to add value to their business? So who are these clients? Are they businesses, wage earners, or superannuation funds? Now, primarily what I'm going to be talking to you today about relates to businesses. And if you have a firm that's primarily wage earner tax returns, unfortunately, you're going to have to do a fair bit of marketing, perhaps go and buy some fees, buy some clients, if you want to start offering a range of diversified business services to your clients. What are your clients' industries? Let's a snapshot of some of the industries that are out there. How many clients do you have in them? I find a lot of people have really no idea of how many tradies they have because they're in 20 or 30 or 50 different categories, aren't they? Painters, carpenters, plumbers, roof fixers, all sorts of people, cabinet makers. But they're all individual business units. They're all charging for services rendered based on hours worked on a job primarily, whether they're quoting for it in a building contract or they're doing it on an ad hoc basis for individual clients. They normally buy in materials from suppliers that they are going to on charge to their customer. And they normally add a margin for the extra work they've got to do to go and arrange those goods to be available. Perhaps go with the customer to pick the right color or the right shape or whatever. So they normally add a margin on. They've all got their own overhead costs and they've all got their own idea of what profit they'd like to make, but there should be some recognition as to how much money they've got invested in this business. So what you can be determining is an appropriate charge out rate that they could be charging based on the individual productivity, the working hours, to achieve their targeted profit. Then you've got retailers and wholesalers. Retailers and wholesalers have got a fairly unique set of problems, haven't they? Because they're buying stock from suppliers, and the traditional categories of stars, cash cows, problem lines, and disasters are very appropriate to them, but they may have a few more. And it's not unusual within a store to have 20 or 30 of these key product areas. And they've all got different types of markups that have been adapted. And many of them need accounting assistance as to how they're going to go about covering their overhead costs, obviously buying the product, getting the stock turned to work, making sure that they feature their star stock all around the business, and they don't have all the cash cows at the front cash registers. So people just walk in and buy something that they're going to sell a lot of, but there's not much markup. Happens a lot in corner stores. Not much markup on newspapers or milk or bread. So why have it at the cash register? Why not scatter it around the store and next to it have a star stock, something that you are selling a reasonable quantity of, but there's a good markup on it. You can help your client. We have a product package which will help you sit down and analyze this type of activity with your client. We've got professional service firms, very similar to tradies, really, although don't tell your doctors that. But there's normally no product markup included. Farmers, pharmacies, graziers, transport operators, property owners. It's an overview of some of the client industries. You might have more. But what I'd be urging you to do is to sit down and think about that. Are you subscribing to benchmarking.com.au's reports on the performance of individual industries? That's a great resource to have available when you're talking to your clients. Because one of the things you should be able to identify to them is you've looked at their profit and loss account, and the gross profit percentage they've achieved is 8 percentage points lower than what the industry average is. And the industry best performance is 15% better than them. That normally gets clients to take notice. And that can be your intro into talking to them about the extra work that you can provide. The services that you could provide need to be sold to your clients. This is not taxation work. They come to you for taxation work because the law says they've got to have a taxation return prepared. There's no compulsion for them to come and talk to you about some of these subjects, but these subjects will help them make money or will help them make a decision to get out of a lost area, something that they're not generating enough money from. So it's a good idea to have a good look at your client industries and to look around for additional supporting information that's available. Maybe you can read some journals so you understand what's happening in various industries. What services are you providing at present? I've got some here that I'm basically assuming that people watching this video would be looking at. Annual financial accounts, yes. Taxation returns. That's a given in most cases. We have some clients who are either have completely worked their way to they're not doing any tax work or they're aiming to achieve that. They're contracting the tax work out to other firms. But most of you will be still doing tax returns and probably will always be doing tax returns because they're a very good cash flow generator within a firm. Presumably you're preparing quarterly, monthly or annual business activity statements for clients. You probably are involved in superannuation fund annual accounts audits. You may be doing financial planning. And then we come to what the industry now calls business advisory services. What sort of services are you providing? So let's look at some of the services that you might be able to provide. And I hope I'm going to generate some thought where you can start doing some thinking about what you could do. The first area is predictive accounting reports, budgets, cash flow forecasts, projected balance sheets, what the banks are now calling the 3-in-1 financial forecast approach. Very important. But the budgets need some supporting calculations. So you need to go back to what's the production going to be? What sets the production targets? Is it a report from marketing, which has identified that there's problems in Europe, therefore we think we can make more of a certain product because there's market opportunities in other countries that were being supplied by European suppliers or whatever. It needs to go back to the basic calculations, not taking last year's figures and adding a percentage. That's not the way to do budgets. Cash flow forecasts then obviously should be linked to the budgets. And the 3-in-1 process basically means, if you're using software like Plan Guru, that you make an entry in the budgets or the cash flow forecasts, or even within the projected balance sheets, it will be reflected wherever else it's got to go across the spectrum of those 3 forecasts. And the banks are really looking for this type of presentation when they're analysing finance applications. So predictive accounting reports is a very important area that you could be involved in supplying reports to your clients. Business review meeting. I think one of the musts if you're acting for a business client. Let's go back and think what might happen in a bigger industry. And perhaps some of you have worked in bigger industries. I did. I was involved in a public company as the chief financial officer and company secretary and observed what was happening. But do you know that bigger companies seem to run themselves as a series of small businesses? Even corporates like Woolworths and Coles tend to have an area manager, and he might be or she might be responsible for a dozen business units that they've got, a dozen stores in those areas. Within those individual stores, there's 40 to 50 departments, and the general manager of that store receives reports on a Monday as to how those 40 to 50 activities traded in the previous week. Their sales, their gross profit percentage, average sales, return stock, write-downs, pilferage, all those bits of information are available to that manager. And included in those stores are butcher shops, delicatessens, bakeries, businesses that you might be acting as accountant for a competing business that might be outside in the shopping mall that the major supermarket's located in. Have you ever thought about that the butcher in the supermarket, the guy managing that business, knows his result for the last week's trading on a Monday? Do your clients know what their trading result was for their butcher shop, their chicken shop, their fast food store or whatever on a weekly basis? Unfortunately, probably not. So the purpose of a business review meeting is, again, to replicate what happens in big businesses. Big businesses have a meeting cycle. Normally starts with a daily 5 to 10 minute meeting where teams come together, not hundreds in one meeting, of course, but in their teams, and discuss issues. And in many businesses, the leadership team meets together. What went wrong yesterday? What's the challenge for the day? Is there anything else that's urgent that we need to know about now? And then at the end of the week, there can be a weekly meeting within a team. Might only last half an hour, but again, people are comparing notes, and it's leading through to a monthly meeting whereby they're then going to be sitting down looking at their performance, not just a profit and loss account, a detailed management account with key performance indicators, budget comparisons, and other information. And normally the accountant or financial person in that business or in that area would be present. I think it's an ideal opportunity for you to be talking to your clients about supplying business review meetings, whereby you would be the facilitator. You would make sure the financial accounts are available and all of the key performance indicators, because they're the key things. And make sure the P&L account is drafted so that the management team can understand it. And we're going to talk more about that in a moment. So business review meetings are very important, monthly or quarterly. preferably monthly. Get your clients into the cycle, this meeting cycle. Detailed management reports. I got a little bit ahead just a moment ago. I touched on this. This is very important. Why don't you sit down and talk to your clients and really talk to them about the profit and loss account that you prepare for them, and ask them what it's telling them about their business. I think you'll get some strange answers once the client decides to tell you the truth. They're not giving the client any real information. Sure, the information is needed for the tax office, but I think your prime responsibility, especially once you start wearing a business advisory services hat, is to give management information to your clients. I was looking at a profit and loss account prepared by an accountant that's involved in a fairly big nationwide firm yesterday afternoon with a client that's wanting to raise capital for their business. And it's a manufacturing type business. And the client told me what he thought his gross profit percentage was going to be. And I said, no, that's not what your profit and loss account's showing. And we looked at it. And I said, now what's missing? He said, where's labor? Labor was down in the expenses. So that was a great indication that the accounts hadn't been prepared. Now that accountant knew that I'd asked for that profit and loss account because we're trying to put together a proposal to go to some investors to invest under Section 708 of the Corporations Act into this company. And a thing like the gross profit percentage is very important. And for a manufacturer, I think labor is a direct cost of getting the product prepared. So it should have been there, as should also have been the labor on costs, workers' comp, payroll tax, superannuation, sick and holiday pay provision. And also all the direct costs should be there. In manufacturing organisations, that's got to include electricity and fuel costs, because you can't manufacture unless you've made those outlays. So my plea to accountants is think this through. It's just not a matter of putting figures into a P&L account that might traditionally suited the requirements of the tax office. I think once you put on the business advisory services hat, you've got to be very mindful that you're servicing your client to help them run a better business, to make more money. What you want to submit to the tax office in the format of it, and as I understand it these days, because I'm a bit out of touch with tax returns, I haven't prepared any for at least 20 years now. You don't actually send the P&L to the tax office in any case. You're only extracting information. So let's make these management accounts something that are really useful for the client, so that they can be seeing what their gross profit percentage is. They can be seeing what the real costs of producing each article are, or each whatever they're producing in their business. It's very important. And if they're undertaking repairs and maintenance that are required within the manufacturing division, shouldn't repairs and maintenance be shown there as one of the direct costs? If machines need some tinkering done on them every so many hours, surely that's a cost that's a direct cost of manufacture, so that you're getting the right figures shown in the correct locations. So that's the management accounts that I think will help you. There should be comparisons to budget. So your budgets, that's why I started with predictive accounting. The budgets are very important because management should have signed off on those. And then we're able to compare how you've performed. The ratio analysis. Now, most accounting firms that are geared to preparing tax return work don't really look at ratios, but they're very important for businesses. I've listed some of them here based on my knowledge. I was in the meat industry and there were a lot of things we wanted to know. What was the fat and bone percentage? You might say, yuck, but what was it? Because they weigh that. Because that's potential waste. But on those bones could have been meat that could have been taken off. And that's money. And that's what businesses want to know. And you don't see that when you just get the profit and loss account that's just talking about sales and cost of sales, unless these things have been looked at. Production per manufacturing team member. I think you should be calculating that in both units and in the value, and comparing it 1 week to, or 1 month to the previous month, and so on. And what did the budget say? And if there's variances, you should investigate. Labor to production value percentage, rework percentage, very important. What's their rework percentage? What's their wastage? Production time per unit produced. Is it taking them 1.5 minutes to do this or whatever? Yield percentage. In the meat industry, it was very important. What was the boning room yield? Wasted product percentage. I talked about that before, an example of fat and bone percentage. This would be atypical to what goes on in most manufacturing businesses. Yet none of it's recorded in the tax return, is it? But it's pretty important information for the manager of that unit to have. I think you need to be mindful of what is really happening in the manufacturing process. I think management requires far more information than what's shown in the traditional profit and loss account. Far more information to help them run their business. Budget comparisons, the accounts reconfigured so that there's been some real thought given as to where various costs are shown. And then what is an overhead expense is shown as an overhead or administration. Incidentally, I'm working with a client at present that we've agreed that we're going to have a major subheading of marketing and selling expenditure, not just putting it into other costs, admin costs. It's not an admin cost. It's very important. So we've got the manufacturing component, and then we've got marketing and selling as a separate area, and percentages being calculated. So it's clearly identified. What had been done previously as the accountant had just included that in the overhead costs. Yet there was thousands of dollars tied up in these items. They need to be identified and compared to the budgets. Did we budget to spend 7% of income on marketing and promotion expenditure? How come we're spending 12%? So let's look at some of the other services that you could provide. Debtor systems review. One of my pet hates is the level of debtors days outstanding in Australia. You know, we won some sort of award a few years ago for having the longest debtors days outstanding in the world. Are you proud of that? I can assure you I'm not. And I think a lot of that responsibility comes back to accountants. Have we been screaming from the rooftops to our clients about getting debtors under control? A few years ago, I was in a business, or was running a seminar for a group of businesses, and someone said to me from the audience, what should be your debtors days outstanding? I said, well, it depends on your business. What's your business? And this lady told me, and I said, well, what's your debtors days outstanding? She said, I don't know. I don't know how to calculate it. I said, oh, okay. Well, what's your turnover? It was about $4 million. I said, well, what's your debtors days outstanding? I can't remember the exact figures, but it worked out that their debtors days outstanding, when I did the calculation, were 107 days. The other people in the room said, what? And this lady realized that her 107 days was probably a bit unusual. And it was, especially when some of the others started answering my call. What's your debtors days outstanding? 45 days, 52 days. Someone had 34 days. They got a round of applause. But 107 days and didn't really know it. So I got involved with that firm and we put in a strategy to reduce it. And we could put a lot more money back into the bank. because we got it down to about 48 days. So there is processes. If you look at it, you can help your clients reduce their debtors days outstanding. Research and development. You know, there's about 20,000 companies a year claim the research and development rebate, the majority of which are SMEs. How many of them come to talk to you? I've just finished a video with someone that was inquiring about our services, and we talked about research and development. He said, yeah, I got one client, I don't know how to handle it. I said, well, you can help him. And if you help him, you might get known in the local area that you're proactive when it comes to research and development. You don't have to have a science degree to be able to advise clients on research and development. It's more of an audit. Within ESS BIZTOOLS, we've produced all of the forms you need, and there's a lot of them. There's 50 odd forms in our system. There's 10 separate papers explaining various components of the research and development journey. But it opens up a lot of other areas that you could help your clients in, research and development. Think about it. Evaluating funding for a business. I think this is a very important part of an accountant's role in 2022. Helping your clients to be able to fund their businesses properly. Now, if they're going to go and borrow, okay, do they have the security? Because most lenders want security. A lot of smart young businesses don't have much security. They could look at raising capital, and thankfully, the current government has introduced some great ways for businesses to be financed. We've got crowdsourced funding, equity raising. They can raise $5 million in a year from the public. There's a process they've got to go through, of course, and they'll need your assistance. Early stage innovation company was really designed to fit in with the people undertaking research and development, or some of them, because they need to be at the very beginning of that journey. But there's something in it under that capital raising for the investors. The government included a couple of carrots there for them to get them interested. And Section 708's been a great servant for the last 35 years. It was hard before then, trying to raise capital for small companies. But under 708, a company can raise up to $2 million, but only from a maximum of 20 investors. But it's there, you can help your clients do that. I can assure you, if you sign on to offer business advisory services, life will not be boring, and your team will not be complaining about boring work. So let's look at something else. There's a whole host of these ones. Buying a business. Someone's always wanting to buy a business. We've got a complete process for you to work through. Selling a business, same thing. Providing virtual CFO services with today's computers, software, and telecommunications, a bit like what we're doing here. You could offer a virtual CFO service for a growing company, but not big enough to employ a full-time CFO. Succession planning, very important in every business. Business health checks, that's really the KPI comparisons. Personal property securities register. I don't like that legislation, but it doesn't matter whether I like it or you like it. Your clients are caught up with it, and they need to understand how it works. I think it's really a problem area for tradies, and we have a full package to guide you through that so they don't get caught. Tradies charge out rates to achieve targeted profits. I referred to that a bit earlier. Retailers pricing with their various product mixes and their markups, so at the end of it all, they can achieve a targeted profit. Professional service firms are the same as tradies, but don't tell them that, except there's no markup for buying things in for the clients. Doesn't normally happen. Scaling up, someone that's currently got a turnover of $1 million, that tells you their aim is to be a 7 million turnover within 3 years. That's great, but you need to work through with them and set up the systems. Otherwise, they'll go broke, because what they don't realize is that even though they're selling more, they'll probably need more money. Why? Because they tie the money up in debtors and stock and new premises and fixtures and fittings, perhaps undertaking further research and development projects, perhaps registering patents, all of which costs money. But if planned, it can be a great journey. Surviving in difficult times. There's always problems somewhere in Australia, isn't there? Last 2 years, we've had one big problem, COVID-19, and it's still hanging around. Although most businesses now seem to be free of the restraints that the government's imposed to try and save us all. But there'll be something else later this year. There'll be another cyclone, another bushfire, another flood. We've seen a fair bit of that already, haven't we? Especially the floods. So surviving in difficult times is a package we've prepared to help you to evaluate the business. We've got 41 sections that you can evaluate. And we then have material that you can be supplying to your clients, articles, short, sharp articles on a particular component that they need extra work done on. Now, that might be partly a justification for you doing that work. So you want to know more? Please go to our website, www.essbiztools.com.au, for a full overview of the systems that we have developed, which we think supply small and medium-sized accountancy firms with the tools and the resources that you need to be able to offer a great service to your clients. So it's going to assist you to add this value to your clients. Your accountancy firm's also going to benefit because you're going to have a range of diversified activities rather than all of your activities being centered on taxation. And I think you'll find your employed accountants will be quite happy because they will be getting exposure to a range of challenging and interesting work. The Accountant's Daily article back in December indicated that 70% of employed accountants were looking around to see if something better was going or more interesting. If you're really involved in the delivery of business advisory services along the ways I've explained today, I don't think you're going to have those problems because your clients will be happy with the services they're getting and your team will be happy to service them because they'll be undertaking interesting and challenging work. Thank you for joining us in this discussion. I don't see that we've received any questions. If you do have any that you think about later on, please send me an email, peter@essbiztools.com.au, or you can give me a phone call, 1-800-232-088. I hope you've had a great day, and I'll talk to you later on. Goodbye.